Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you have had a very beautiful weekend so far. So in today's video, guys, we are going to be talking about the top 5 options plays, of course. Keep in mind, all of them are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we run on the channel. Selling puts, guys, is such an easy strategy to do, whether you're a beginner, intermediate, or even advanced investor. It provides a great source of income, guys, and you can basically think of it as basically a buy limit order that pays you. If you don't know what selling a put entails, let me explain really quickly. It's basically, as I said, a buy limit order that pays you a little bit of cash while you wait for it to be filled. So take a look at Nvidia right here. Let's say that I wanted to buy Nvidia stock at around $110. Well, I can do that with 2 ways. I can either set a buy limit order right here for 100 shares, but if the market never comes down into it, I don't get the shares and the order just kind of sits there and does absolutely nothing. We don't get paid for it, right? That's where the short put order comes in. Selling puts to open, more specifically, guys. If we go into the Nvidia options chain right here, we can see that at the $110 strike for the Friday expiration, if I were to sell this contract to open, we would collect a total of $72, which means if Nvidia closes above 110 by Friday, no problem at all. We just get to keep all of the $72 in our pockets and we don't have to buy any shares. However, if the stock ends under $110, then we have to buy the shares as we were looking to do anyways, but we get a $72 discount on the position or 72 cents per share. So it does a great job in reducing our average cost upon entering that position. Extremely easy strategy to run here, guys. And you'll see that when we go through the strategy rules, it is a very smooth strategy to run and a very high win rate as well in the fashion that I choose to run it too. So in today's video, guys, we're going to go through a few things together. Number one, we're going to go through a little bit of a weekly preview, what we can possibly be expecting in the markets this week in terms of volatility. Thereafter, we're going to go through a bit of the strategy rules, guys. We're going to go over them fairly quickly, but I just want to put out there the strategy rules that we're going to be respecting to find all of these individual plays that I'll be presenting to you guys in the event that you want to replicate this on your own, of course. And then lastly, of course, we're going to go through the top 5 options plays of the week. And due to popular requests last week, I apologize. I didn't give you guys any bonus plays last week. I know, my bad. So I'll be giving you a lot of bonus plays this week as well, outside of the top 5. So without further ado, guys, a lot to take care of today. So let's jump right into it, right? So in terms of the market expectations for the week, guys, we know that in the technical aspect of everything, we are doing fairly good. The SPY bulls control right now a very beautiful uptrend above the all-time highs and possibly using our prior all-time highs, which used to be resistance, now being able to be acted upon as support. On the weekly timeframes as well, we are looking very beautiful for some weekly continuation into this week too. And not only there, but also the QQQ as well, right? QQQ breaking out from this typing wedge pattern right here, breaking up and above, possibly just looking to use the base of this as some support before a possible next leg higher. Why do we have that bias? Because the weekly is shaping up into a gorgeous weekly uptrend. So I wouldn't be too surprised, guys, if the markets do grind a little bit higher this week as we kind of continue off of the sugar high from the most recent rate cuts. Now, keep in mind, in terms of your macro data this week, we do have a lot of data, but I wouldn't be surprised if it's not that impactful on the markets. Now, on the Monday session, we have some manufacturing data. That could be a noteworthy event, but I don't think it's going to move the markets in a tremendous fashion. Then we have a bunch of Federal Reserve speakers, guys. Look at the amount, right? 1, 2, 3. And then on the Thursday session as well, we get for Jerome Powell speaking again. We get Fed Williams, Fed Barr, Fed Kashkari again. And we also get the final GDP number for Q2. We're not expecting much change there because it's just a revised number, right? We already pretty much have it. And as a whole, guys, it pretty much ends there. On Friday, we get the PCE number. So that's another rate, inflation read. And so far, so good, guys. The expectation for the inflation number is supposed to show that inflation continues trending to the downside. So I wouldn't say that there's much in the works of economic factors that can really derail these markets over the course of this week per se. So it should be a fairly smooth week. I'm not expecting a tremendous amount of volatility, but still we're going to be targeting some very solid stocks, right? Don't want to do any FOMO plays or chase all the markets higher right now. We want to be sticking to our strategy. Now, what is that strategy? Well, I'm glad you guys asked. So let's first jump into the put wheel strategy right here. So once again, guys, these are going to be selling puts to open open, guys. None of these plays is me recommending to buy any of these put options. No, no, no. They are selling puts to open, right? So we are the option writer. We are not buying these options. So let me explain how this one works. So if you guys haven't seen my 30-minute video, guys, where I break down the strategy in detail, I'll leave that video linked in the top right corner of the video right now, and also down below in the description. If you haven't had a chance to check it out, definitely check it out. I go over these rules a lot more in detail and show you guys how I pick my stocks, how I pick my strikes, and just everything in a much more detailed fashion. For now, let's go over these quickly. So in terms of the put wheel, guys, this is to get into a possible position, right? So we're looking to write these puts at the open, how do we derive where we want to write some puts? Well, glad you guys asked. So number one, we have to be writing puts on a solid company, guys. It's rule number one for a reason. Never write any put options on a stock that you do not want to own at a strike price you do not want to own the stock. It has to be a solid company and a high quality company for you. That's because in the event you do get assigned the shares, if you're required to buy the shares because the option ends in the money, at least you know that you're in a very solid company at a very solid price level, right? So that's why it's rule number one. Do not ignore this, guys, right? Number two, the stock needs to be in a monthly uptrend or at least in a long-term range. A monthly uptrend can look something like this, beautiful uptrend, or a longer term range can look something like perhaps the chart of Autodesk, right? So Autodesk, you guys can see very long-term, beautiful range of support down here, trapped in this range, and we want to be writing options at the bottom end of this 1 year range. So all of the positions that I'll show on the channel, guys, will always be one of these two criteria. Number three, no earnings this week, guys. Do not make that mistake of writing any puts on a stock that has earnings this week. It is just not worth it. The premiums during a week of earnings are very, very good, but do not get attracted by those premiums, guys. We've seen what's happened with companies time and time again over the last 3 to 6 months, right? The expected move for earnings could be 5-7% either way, and some of these companies are moving 15-20% after earnings, sometimes especially to the downside, right? So we do not want to get trapped in an earnings play gone wrong. So if you want to avoid all that volatility, guys, and stay true to the strategy, do not write any puts on companies that have earnings this week. Number four, we want to be writing puts on stocks that are in a support area or an area of breakout retest. I'll bring out the Autodesk chart once again. As I've said previously, a big support area would be this one down there. The breakout retest trade is somewhat different. You can see the higher end of the range right here, and then we finally break out of the range, retest the top end of the range, and run. Usually this retest area is a very high probability trade for at least some continuation. So all of the options that I'll show on the channel, guys, are going to be respecting one of these two criterias. Now, these two next points go hand in hand. We want to be writing at or lower than the expected move in a given week. If you guys don't know what the expected move on a given stock is, you can just go to optionsai.com and they have a free expected move calculator for you. Now, keep in mind, let me bring up a company that everybody knows very well. Let me just pull up NVIDIA for example purposes, right? So this is a chart of what Wall Street's expectation of the expected move either up or down is going to be in a given week. So as we can see for NVIDIA right here, it is currently about 4.4% up or down. We want to be targeting the lower end of the expected move, of course. So the goal is to be writing put options below this expected move, guys. Why? Because if in the early portion of the week, a stock really craters beyond its expected move, usually we do have a little bit of mean reversion and pushes the stock back in to its expected boundaries for the week, right? So if we can catch it early, close or lower than the expected move early on in the week, that is going to be a very juicy opportunity for us. Now, we want to be combining that with this further one, writing puts on a red or flat day. It goes with the point that I just described earlier, right? If we're looking to write puts below this expected move, well, obviously, the closer that we come down into it early in the week, the better, right? Because it frees up even lower and lower and lower strikes, which once again improves our odds of not being assigned. We can just probably pocket all of that juicy premium in our pockets by the end of the week, right? So it stands to argue if we're writing puts on a red or at least flat day, well, we can probably get some even better strikes than the expected move. That is the logic behind that one. The next one right here, this is our ROI, guys. So we want to be always writing puts that give us between 0.5% and 0.75% in weekly premium. This is your take-home pay, guys. If we're always writing about 0.5% in ROI per week, well, you can do this on an annualized basis, right? 0.5% times 52 weeks gives us about 26% on an annualized ROI basis. This just takes out compounding and anything, right? This is just a straight linear calculation. In all practice, the ROI is much higher than that, but that is our baseline, guys. Why between 0.5% and 0.75, guys? After running this strategy for the last 5-6 years, I have determined that this is actually the sweet spot. The sweet spot between having a very high ROI basis, right? We have a very high, high win rate, right? Very high win rate on the channel for a lot of these short puts, right? 90+% win rate on most of the contracts that we choose to write. Now, not only does it give us a good buffer of not being assigned, but it also provides us a very juicy amount of premium, right? What we want to avoid is being too close to the current share price. So what I mean when I say 0.5%, guys, is I'm talking about the amount of premium right here that we can find on the bid. As a quick mental math rule, if you want to see 0.5%, guys, just divide the strike price by 2, and you should be able to see that in cent increments on the bid, right? So if I were to divide 109 by 2, it's roughly 55. So we would need to see 55 cents on the bid right here. If you want me to do the calculation for you real quick, just do 109, or excuse me, the other way around, 0.56 divided by your 109 strike. And you can see that that is literally 0.5%, right? So very easy mental math way of doing it. Just divide the strike price by 2, and you should see that in cent increments on the bid, right? Why do we not want more than that, guys? Why don't we get too greedy? Well, because you can see NVIDIA right now is trading at about 116, right? If we were to write the 115 puts, sure, they do give about $221 in premium, but it's way too close. Our chances of being assigned are really, really, really high, right? And if we go much lower, we're just not getting enough money for the exposure that we're putting up for the trade. So that's why I feel that the 0.5% is a very juicy middle ground. Now, lastly, guys, we want to be setting a take profit order at 90% of the contract value. That's very simply because this strategy is so passive, guys. Usually you're going to be writing all of these options on a Monday or Tuesday morning, and then you just let the time decay pull all the premium out of the option throughout the rest of the week, right? So you don't have to be at your computer for 4, 6, 8 hours a day at all. So in the event that your order goes into take profit areas very, very rapidly, and you're now sitting at 90% profitability, we want to take that off the table so we can possibly find another opportunity for that capital, right? So that's just the gist of the put wheel strategy. So this is basically possibly getting into a trade, right? The short puts is like a buy limit order. Now, we're not supposed to be assigned most of the time, but in the event that we do get assigned, right? Well, here's how we get out of those shares. This is going to be otherwise known as your sell limit order. We're going to use covered calls, right? So for covered calls, in the event we get assigned, we want to be writing covered calls the very following week, guys, for the same rules, about 0.5% to 1% in weekly premium for the covered calls. And in the event we get assigned, we're always going to be writing at the assigned strike price or one strike higher. So in the event that we write these NVIDIA 110s this week and the stock closes below and we have to buy the shares, very simply, guys, the following week thereafter, we're going to be writing the $110 call options to potentially get out of the trade in that following fashion, right? So that is why we're always going to be writing at the assigned strike price or one strike higher. The only time I'll be writing one strike higher, guys, very, very simply, is in the event we get assigned at 110, and then on the Monday morning session thereafter, right? Let's say we get assigned at 110 on the Friday. Then on the Monday morning session, right? Let's say the stock closes at like 109.50, 109. And then on Monday, for some reason, it gaps up and opens at 114. Well, then I would not be opposed, guys, to maybe writing the 111, the 112s, or even the 113 covered calls. That's the only time that you'll find me writing one strike higher than the one that I got assigned at. So hopefully all of these rules make sense for you guys. Now let's jump into the juicy stuff. Let's jump into the top 5 options plays of the week. And they're going to be some good ones, guys, because we have some really good opportunities in the market right now. Stock number 1 is going to be Novo Nordisk, guys, a very decent healthcare play. Now, this company has outstanding fundamentals, and because of their GLP-1 drugs, basically the obesity drugs, right? The Ozempic craze right now, this company is going to be absolutely printing revenues and profits at least for the next 3-4 years is their guidance. The fundamentals are amazing on this company. Look at the profit margins, guys, right? 30+% profit margins for a pharmaceutical company. And look at this EPS growth that we're coming into for the next 3 years and revenue growth as well. Nothing wrong with this company. It's been consolidating largely sideways now ever since the month of February, and finally coming back down into this juicy area of support, almost coming down and touching the weekly 50 EMA. This pink line right here, something they have not done, guys, since October of 2022. So I like this one, and it's in a very nice monthly uptrend as well. Just looking to set the monthly higher lows before a possible next leg of monthly rallies coming up. So I like this area right here, guys. So the expected move for NVO this week is 123.70. Now, we had a very decent dip opportunity on the Friday session, and if that continues into the Monday morning, we may be even able to get even much lower than this expected move, guys. I would love to see about 121, 120 right here. So let's go shopping for some NVO options, shall we? And let's see what can we find below that expected move of 123.70. So let's go have a look right here. Let's pull up NVO options together and let's go do some shopping. So this is the options chain for Friday. As you can see right here, guys, where is the 0.5% rule? It is right here at 123. Half of 123 is about 61.5, right? And you can see we do get at least that on the bid, but I want to get a little bit lower, guys, right? So in the event NVO on the Monday morning has a little bit of a dip, talking about coming down to the 126, 125, that may indeed free up, guys, the 122s, 121s, and even 120, right? We have to be dynamic with how we choose these strikes. If NVO has a very bad day on Monday and comes down like, 3-4% right away and comes right down into the expected move, 122, 121, then we can get even lower. Think the 117s, 116s, right? As low as we can go on this options chain while still getting our 0.5%. So always be dynamic depending on the move that happens on the Monday morning, guys, right? So keeping that in mind, that would be my target strikes for the week, guys. 122 down to about 120. This is going to be the target range that I do want to play NVO stock over the course of this week for selling some put options, right? So now stock number 2 is going to be one that we've featured on the channel for a lot of different weeks running in a row at this point. That is going to be Google, right? One of your most solid big tech names out there in terms of the valuation. The valuation on this one, guys, is ridiculously cheap, right? Now, we did the valuation admittedly at 158, but it's not that much higher, right? Maybe about 3-4% higher. The valuation, the PEG ratio of only about 1.15, 1.2 right now is ridiculously cheap. It is the fundamentally cheapest big tech stock in the market right now as a whole. So I will be looking to play any Google pullbacks, guys, fairly aggressively, and that's what we're going to look to do this week as well. So the expected move for Google this week is about 161.34. I want to be targeting the lower end of this range of support, guys. This range that held up the market previously, and you can see this green line right here is the 200-day moving average as well. So we want to be targeting this pocket right here, call it about 160 to about 158. I would love to see that, because what are we expecting on Google, guys? Probably expecting a daily higher low for possible daily trend continuation all the way into the 170s. And we're looking good at an attempt at a weekly trend reversal pattern as well. So I'm going to be looking to capitalize on this movement by Google right now. The expected move, as I said, for the week, 161.34. Let's go shopping for some Google together, shall we? So taking a look right here at the options chain for Google, can we find anything below the expected move of 161.34? Well, as a matter of fact, at the 160s right now, as you can see, guys, there is just not that much premium, right? Google, the only premium that's really available is at the 162.5, but that is a bit too high, guys. Not only is it too close to the share price right now, but it's also above the expected move. So it stands to argue we will have to wait for a Google pullback, right? If we can see Google pullback Monday or Tuesday morning here into the 162s, maybe even high 161s, right? If we get a maybe, 2% drop on Google Monday or Tuesday, right? Or together, and brings us down into the 161 range, guys, that is probably going to free up a lot of premium on the 157.50s. Now, keep in mind, how much premium do we want to see here? Well, we at least want to see about, let's call it about 80 cents, right? I'd settle for about 70, 75 cents because Google doesn't move as much. There's not that much implied volatility, and it is a very solid company, right? So if I can see about 70, 80 cents on this bid right here, Monday or Tuesday, at the 157.5s on Google, I will probably take that trade. If you're a little bit more of an aggressive bull, such as myself, I may even be tempted to take the 160s on any short form pullback, right? If we get a decent little pullback here in the 162s, I may get a little bit greedy with it and go for the 160 strike. But if you want to be conservative, possibly wait for the 157.50s. You don't want to chase this stock too much, especially if you don't have a tremendous amount of buying power in your account, right? So that is the trade that we're looking for on Google. Now, trade number 3 is going to be Square. So Square also representing a glorious buying opportunity right now, guys. We are extremely cheap on this stock. At 63 bucks, it is only a 0.41 peg ratio, which is so cheap, guys. It's not even funny at this point, right? So moving on in, we also have a very beautiful area of long-term monthly support at the lower levels. It starts at about at 64 all the way down to roughly $54, right? But we're going to be targeting the start of this large support zone right here. As you can see, it's where the markets really did a good job of bouncing all the way since June, right? Other than the Black Monday event in the early August where everything fell off, you can kind of argue that right here, the 6160 level has kind of been our temporary bottom, at least for the last 3-4 months, and I do believe that will continue. So the expected move for Square right now for the week is 64.95. So let's go shopping. Can we find any premium on Square below 64.95? So think of strikes 64, 63, etc., right? As you can see right now, we do have the desired premium at the $64 strike, guys. 33 cents, which is literally just about 0.5%. It's actually a little bit over, right? 0.33 divided by 64, you're getting just over 0.5%. So that being said, guys, the 64s do seem interesting to me, but in the event we drop a little bit more Monday or Tuesday, guys, it may even free up the 63s or possibly even the 62s, depending on the size of the drop that we may find on the Monday or Tuesday session. So anything below 64, guys, I am all for it. 64, 63, 62, as low as we can possibly get while still getting our 0.5% rule in premium. So that's going to be the trade for Square. Now, then following stocks, this is going to be trade ideas number 4. It's going to be a pair of semiconductor trades that I have prepared for you guys, right? So number 1 semiconductor trade is going to be ON Semiconductor, one of my favorite plays to do with the wheel strategy. Keep in mind, we are in a very big long-term range area of support, which starts at about 70 and goes all the way down to about 60 bucks. The 200 weekly moving average is sitting right there right now at about $64. So let's take a look at this, guys. I love this support area on ON, and it has been doing a good job, guys, of keeping up ever since November, last November, right? This is why I love playing this company in this lower area. And the fundamentals of the business are not doing too bad either. So that being said, guys, the expected move for the week is 66.7. Now let's go shopping together. Can we find some good premium on ON below the expected move of 66.7? And as you can see right here, we actually can. Even at the $65 strike, guys, we get about 34 cents in premium, which is above our 0.5% rule. So I wouldn't mind, guys, doing any one of these following 3 strikes: 65, 64, 63, depending on how Monday and Tuesday morning open. If we open roughly flat, then it stands to argue that the only one available will probably be the $65 strike. Now, keep in mind, in the event we drop a little bit Monday or Tuesday morning into $68 area, $67 area maybe, that may free up even lower strikes such as the 64 and 63. So once again, we want to be dynamic with our strike selection depending on the size of the drop on a Monday or Tuesday session. So that is the trade for ON Semiconductor. Now, the second semiconductor name, we went over it briefly in the introduction, is going to be everybody's favorite semiconductor name, NVIDIA, right? So NVIDIA, take a look at this, guys. NVIDIA right now is kind of in no man's land. We are struggling with this area of overhead resistance, but we don't really have much support below us unless we start talking about the 107 all the way into the 105 range down there, right? So we're a bit too far from it right now. So essentially, the expected move for NVIDIA this week is 110.89, but excuse me, we know this one can be fairly volatile on a weekly basis. So what I'm going to be looking out for on NVIDIA, guys, I need to see a drop, right? A very quick and rapid drop, possibly on a Monday or Tuesday session. If we start pulling back 3-4%, like NVIDIA can honestly do on any given day, right? If we start pulling back 3-4% into maybe the 112, 111 range, as close as possible into this expected move, right? That's probably going to free up some premium, guys. 107, 106, 105, preferably as close to 105 as possible, which is why I gave you guys 2 trades, right? Oh, and semiconductor, the trade is ready, but Nvidia, the trade is not quite ready, but it's a great play that I do want to keep an eye on. So let's take a look at some Nvidia premiums together, shall we? And as you can see right now, guys, we do have some good premium below the expected move, 110.89, but it's just not low enough for me, right? As you can see, the 0.5% rule kind of stops at about 56 cents at the 109s. If we go a bit lower than that, we don't get enough premium, right? So I want to be in this range right here, guys, 107 down to 105. So it stands to argue that if we want to find decent premium here, the stock needs to drop. So that's why Monday or Tuesday, I'll be watching for this one. If we get a decent little drop down here, perfect. It may free up my preferred strike prices for Nvidia. Now, obviously, if you're a more aggressive Nvidia bull, well, then you already do have the desired premium right here on the 110s and the 109s, which are below the expected move, of course, but I want to be waiting for a little bit more. I want to be greedy with my strikes, especially in this current very volatile, very uncertain market environment, right? So that's trades number 4. And now for the last trade, guys, I'm going to be bringing up a very good one. This is going to be, well, no, not that one. It's going to be gold, but not that gold. It's going to be Barrick Gold Corporation, right? The arguably largest gold producer, I mean, they mine and refine gold, right? They don't actually make it, but you guys know what I mean, right? So one of your gold miners, the largest gold miner in the world. And as you can see, guys, because of the pure price appreciation of gold recently, gold has been on an absolute tear, and I do believe that gold will continue to outperform in this very volatile and uncertain market climate where we deal with a lot of recessionary narrative headlines, right? So to make a play off of this, obviously we can't really write short puts on actual spot gold, so I want to be going with some of the miners right here, and also the share price is cheap. So for those of you that don't have a very large account that want to still make a proxy play on gold with the wheel strategy, this could be possibly one that is fairly interesting. Now keep in mind the area that we're targeting, guys, is a very big one, right? This is a breakout retest trade. As you can see, we have just now broken out of this whole area right there, broken out of all the short-term moving averages too, and now we are looking very good for some possible trend expansion. However, if we get stuck here over the course of the week and we kind of putter around right here, guys, that is the beautiful part of the strategy. It's going to free up a lot of premium down in this lower support range. So the targeted move for this week, the expected move is 19.78. So let's go shopping together. Can we find some premium on Barrick Gold below that level right there? So let's have a look, right? So in terms of Barrick Gold, let's have a brief look on the options chain. So we want to find below 19.78, right? So let's have a look below 19.78. As you can see, the 1950s do not pay the required premium. You would need to at least see about 10 cents on this bid right here. It is not too far away, however. So in the event that Barrick Gold has a red start to the week, opens red on a Monday or Tuesday session, and comes down into the low $20, maybe even high 19s, that will most likely free up the 1950s. And in the event it has a really bad start to the week, like a minus 2% day for some which reason, right? And pulls down into the expected move right away, that may even free up the $19 strikes, which is even deeper, guys, into our big area of support. So I like these two levels, guys, 1950 and $19 strikes. I love them both. It'll be one of the two for me. I'll be watching which one of the two gets freed up early in the week, depending on the size of a possible drop, right? So that is pretty much all of the short-term options plays that I was willing to present to you guys, the top 5 in other words. Now let's go over a bunch of bonus plays that I have for you guys. Number 1 is going to be a little bit risky, but I know a lot of people on the channel think that this one is coming into deep value territory. And as a matter of fact, it actually is, right? This one is going to be CELH. So CLH, I'll tell you guys where I want to be bidding this one, just to give you guys an idea, right? All the way down here, talking about $26, $27. So it's on the back burner because CLH has very good volatility. If we see a minus 3-4% day on a Monday session or something like that, we can probably find some premium, $26, $25. And that is where this stock really comes into deep value territory, in my opinion. So I always am watching this one moving forward in the next week or two, guys. $26, $25 for those short put options. Stock number 2 is going to be UPS. So UPS has been in a very beautiful area of accumulation over the past couple of weeks, guys, down here in the mid 120s. Now, we know that UPS got dragged down with FedEx earnings last week, but in the event UPS continues to get dragged down this week, let's say we pull back into the 127, 126 area, well, that may even free up the strikes at the 125, guys. I want 125 on UPS or better, which would be this line right here, because we're getting a very juicy dividend yield right now, 5.07% in the event we are assigned. And 125, guys, really starts playing into all of the big resistance areas from 2017, 2018, and 2019, guys. It's coming into its bottoming process. I love the valuation of this stock down here. So it could be a very good opportunity in the event that the markets end up a little bit red on UPS this week to be bidding at those strikes. The other one that I'll be looking into, guys, is New Holdings. If you guys don't know this company, it's a very solid bank in South America. Their fundamentals are absolutely legendary right now, and Warren Buffett is a very large investor. A lot of other super investors have big positions in this one as well. However, this one is one that just keeps running away from us, right? So the area that I want to be targeting, guys, is this retest range right here, 1350, right? So I'll be looking for this one in the event that New Holdings drops a little bit this week and kind of frees up some premium at the 1350s. I will be looking for this strike, guys, very, very attentively. I would love to play this stock if it comes down there. Even 14, I'm willing to get a little bit more aggressive on this one. 14 down at 13.5, I will start bidding on this company, guys, because I think that this one is just going to continue on a monthly uptrend trajectory. It's looking very good in terms of the fundamentals as well. So that one's always on the back burner. The other trade that I always like keeping an eye on a weekly basis, and is also a cheaper stock for all of you out there that are looking for kind of cheaper plays, right? If you want to run this strategy, SoFi is my go-to play for those. Talking about maybe the $7.50 strike. I know it's a little bit high from it now, but that's why these are the bonus plays, right? They're not quite ready. They're in the general area, but we keep them on the back burner, on the watch list in the event we get an opportunity. If SoFi comes down back into maybe the 780, 770s, that's going to free up some premium on the 750 strike, and that's where I'm going to be looking to write some options as well. The next play, which is also somewhat risky, but is in a sector that now should start to be more and more favorable over the forthcoming months because of interest rates going down, of course, and that is going to be Enphase, one of my preferred solar plays. As you can see, it's been in a very long-term range of accumulation, the lower end of which is at the roughly 105 down to 100 levels. So in the event that Enphase continues pulling a little bit back this week, maybe coming into the 110, it could free up some strikes, 105 or below, and that's where I want to play this company, guys. So I keep this one on the back burner in the event we get some opportunities there. I'm always interested in playing that on a weekly basis. And the last one is one of our oil plays as well, right? So CVX is coming into a very nice area too. As you can see, very nice long-standing support range for the stock since March of 2022. This one, in the event we get a sign, pays a 4.5% dividend. Such a strong company, guys. Such a strong balance sheet as well. The fundamentals are extremely good. So in the event that we continue seeing a little bit of oil weakness because of September seasonality right now, and we pull back down towards the 140 range, I do love to play this one. 140 down to 135 would not be opposed to be running the wheel strategy on some CVX shares down there, right? So those are just 6 bonus plays that I figured I should present to you guys. Hopefully you did enjoy all the top 5 options plays and the bonus plays as well. So that's pretty much everything I had for you guys today. If you enjoyed the video, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new, guys. We do these videos every single Sunday night in preparation of the week to come. So hopefully I see you back in a couple more. And lastly, guys, if you have any questions on the strategy, or if you want to run by some companies that you think could be a good candidate, but maybe you want a second opinion, always feel free to leave them down below in the comments, guys, and it'll be my pleasure to answer you. So take care, guys. Have a good week trading. I'll see you in the Monday through Friday daily market recap videos. Take care and peace.